Okay, we are live. Welcome to Interstate Mortgage. We are helping Arizona. We do Arizona mortgage, last 30 years. Boom. And we're very happy with our clients. We got zero complaints. And we're here to help you. So we're doing a live stream on questions, mortgage news, what's happening. If you want to throw a question in the comment, man, I'd love to have one. We're just starting this channel, so if you could give us a like, thumbs up, all that good stuff, it'll help us start gathering some users, and that's the name of the game. So while we're waiting for a potential question, I'm going to kind of do some mortgage news for the day. I'm going to show you a chart. This is let's see if this works. It does. So we're looking at a 1 month chart on the 10-year treasury. Be cool if my mouse was bigger. But you can kind of see when the disruption in the Middle East happened, or kind of right around the State of the Union, Trump was bragging about mortgage rates hitting a 3-year low. That became a news item. And mortgage rates tend to follow the treasury. It's not a pound for pound, but it's an indicator that most people use. And you can kind of see since things broke out, we have just been going up and up and up. And we hit kind of a 4.4 on the 10-year. And that is not what the mortgage rate is, but that is an index basically that the mortgage rates will price off of. So mortgage rates are sitting just probably 6% right now on a first mortgage rate for typical high credit, etc. Today's news was really nice. So I'll move this to a 5-year. You can kind of see over the weekend and leading up to the weekend. And then boom, this was an announcement right in here that Trump is in negotiations with Iran and is feeling confident. So confidence removes uncertainty, and you can just see the cost drop. Boom. So right now we kind of came off those lows of the morning and we're testing them. So we want this to continue downward so that we can get our first mortgage money into the high fives. When I'm quoting rates, I'm trying to get you with little to no points. We all know that, points will buy down your rate. Typically 1% of your loan amount. If you're buying let's say a $400,000 loan, at 1% puts you at $4,000. If you were to buy points, every $4,000 should get you roughly a quarter point to your rate. So I'm talking when I'm saying rates, 6 or just under, we're trying to get that with no points. If you're in the market right now, anywhere in the nation, and you're seeing, hey, guy just quoted me 6.25 and I'm paying a point, that's a red flag. So you need to shop it. If you want help, I am happy to offer you a referral. I don't get paid on those. I'm just doing that out of the law of karma. I'm in Arizona, so that's where the market I service. But pricing is pretty straight across the board nationwide. So again, recap. First mortgage, you want to be 6%. You know what we could do? I should price a deal live with you. That would be, I'm in a different browser, so I don't have my logins. But I will fix that. We'll do some pricing live on deals, couple scenarios to do an actual. We'll do that on a different live stream. Main thing is, let's think about this too, second mortgage. So if you're in the market for a mortgage, there's probably one of two things happening. You're either buying, so that's a first mortgage. If you have some consolidation that needs to happen, let's say you built some credit card balances up, the market says there's about a 2 trillion in credit card, and those rates average 16, 18, 25. Most people don't even know what the rate is on their credit card. It's not super clear. They need to work on making that obvious that, you know, if you're paying 22%, it needs to be like, hey, look at me. But what we're excited about is that the mortgage rates on a second mortgage, we're seeing at a 6.5 and even lower, depending on your loan to value and your credit score. So that's really exciting because that pays off. Potentially, you can start saving 1,000, 2,000 pretty quick per month if your balances are 50,000, 100,000. If you're in those extreme cases, a second is huge for you. One client, I was able to cash flow $1,000 a month free up by consolidating those cards. And then you take that $1,000 and you start chunking that towards the principal of the second. And that puts your, cuts your payment to where you're now reducing $12,000 a year versus they were just paying the minimum. And people don't realize you pay a minimum, credit card turns into a mortgage pretty quick. You'll average 15 years. Let's just Google it. Okay, what is average? Looky there, 15. So that's not what you want. We want to take during the money when you've got money on loan. You're a borrower with the lowest interest rate possible. It just makes common sense. So 6.5. Here's the other exciting thing: if that guy can leave, and I don't know what, I think Senator Tillis is threatening, hey, we're not going to confirm the new guy until the old investigation is done. But I'm hearing a federal judge say you can't investigate; it's considered political. So and then the Fed is saying, I'm going to stay in there pro temp until all this is resolved. So that's messy. That's I don't know what Tillis is trying to prove. A Federal Reserve, I know it needs independence, but it's a quasi-independence. You can't just run amok on your costs and spend billions without no questions asked. And if you ask, political, that's we know that's BS. So let's assume that gets cleaned up. We know costs can go high, but why? Why does someone look at things in percentage, and what's the source of that cost, and has the profit margin increased on the contractor with these price increases? So is the contractor still saying, hey, I'm netting the same and my cousin doesn't, these type of things, and everybody's just acting in good faith? So that's the moral of that story. And if we can get the feds, our new person in there, and we look at prices of oil, and I know that's concern on inflation. So we have to make sure that we can wrap up the war as quickly as possible. And we want this to start trending back down. And then that means the mortgage rates are going to come down. And if we start seeing mortgage rates in the 5.5%, that's going to open up some equity appreciation, because your debt service on that house is going to become more affordable. And as things become more affordable, it tends to raise the value of those products, namely real estate. So that is what we're hoping. And back to the second mortgage, if Feds cut rates, the Fed fund rate, that affects the mortgage on a second 1-to-1, meaning if they drop a half and the rate today that you're paying on that second is 6.5, then we're going to go 6%. And what I'm excited for is if we start to see our second mortgage rates hit that 5.5% sweet spot. That's going to move some. That's going to move some markets. Debt consolidation for consumers. You take a 25% credit card, $50,000 balance, and you move that into a 6% HELOC. You're saving a lot of money per month. And like I said, you don't take that savings and spend it. You got to take that savings and apply it towards the principal on that HELOC, because as you pay down a HELOC, be aware that if the balance, you have a $50,000 HELOC and you pay down $25,000 over the next 2 years, you still have access to that $25,000 if you needed to do something. For example, someone's got a great deal on a hot rod that is worth $10,000 more than what they're doing, but they need the cash. You can go buy that thing and then flip it, use it for a little bit, but you're now becoming accessible to quick cash that you draw just like you would a credit card and use your HELOC. So you want to pay it down, but you still have access to it. Another thing too is if you, for some reason, need to sell, let's say a job is, you're moving in 6 months. One thing in this market is it's a buyer's market. So what that means is the buyer is going to be in control of the negotiation, and you're going to kind of be beholden to their offer coming in. There's quite a bit of inventory on the market, and with rates high, buyers are taking 5-10% off. They're asking for seller concessions, asking you to buy down the rate, things of this sort. So one thing that you can do to set yourself apart is getting a home equity line and then doing the repairs that you've put off, or adding some turf in the backyard, sprucing up your backyard to make it inviting and different, setting apart from your neighbors that you're competing with. So, always look at what the neighbors are doing as far as sales, what they're listing at. Is their kitchen been updated, etc.? These are things that a new buyer, if they're comparing you to someone else and they've just updated their kitchen to a more modern, style, and yours is from 2000, they don't want to take on the burden of getting your stuff fixed up. They want to have a turnkey setup. So a home equity line used correctly on your property, we would argue, not only could equal what you spend, but if you do it right and you're efficient with your costs, unlike our Federal Reserve Chairman Powell, you can double what you put in it, because there's an extreme value there of having it be turnkey. The cost, if you did $25,000 in repairs with a contractor, that was giving you a fair price, and like it seems the Federal Reserve is getting. The fact that that's all done and borrower could just walk in, a new buyer, and enjoy those improvements, that adds more value than if they were to start from scratch, be trying to move in. They got dust, they've got contractors, they can't have the full experience. So when they're shopping, they're looking for the person that already knew they were coming and got those things dialed in. Ask Chat, I'm guessing Chat or whatever AI you prefer, has already ran numbers on repairs on a home that add the most value. Obviously, kitchen and bathrooms and closets are big items that you could focus on. Another thing is if you know your roof is about to take a dump, that's the first thing that buyers will be asking when they do their inspection is, how old is your roof? And if you're at 20 years, that's they know something's coming down the pike. Another person's house has not been done. That's a big deal. Air conditioning is another big deal, having new units versus 20 years. So these are all things that will differentiate you from the market, and they add value. You're going to get that back with solid offers if your house is in what some people call tippy top shape. So some things to consider if you know you can plan for a home that you're going to have to be selling down the road is putting some investment in it that allows the buyer to just walk in and just move their stuff in and relax, because that's a premium value versus starting a rehab or you knocking off 50 grand on your purchase price. Realtors are very quick to be like, hey, we're going to run it for a week. If we don't get the action, then we're going to start price dropping. Boom, boom, boom. And that once you start that, the potential buyer is just going to say, well, you know what? We'll watch. We'll wait. If every week equates to 5 grand, do the math on that. I'll wait 60 days on you. So don't put that message out to your buyer that you're desperate and you just start price dropping every week. Just be smart on the price that you go in, because you know the competition. And if the buyer's there, then you get it, and sometimes the buyer's not there. So there's other options that you can look at, particularly if you've got a current low rate mortgage on the home that you're trying to sell. There's some techniques that we can talk to you about that might work really nice for you. And they're dealing with mortgage wrap, and is your loan assumable? That's a big one. You can ask your servicer. Servicer is where you're making your payment. I know that VA, there's a story of a house just down the road from me that had a VA loan. They were wanting to sell it. And they said, hey, this loan is assumable, which means the new owner can take it over. The rate was like 2.5%. So the new buyer paid north of $2 million on a property that was probably worth closer to 1.7. So they overpaid for the property because the $2 million home was still cheaper than someone that was selling a 1.2, 1.3 at a mortgage. At the time, the mortgage rates were at their peak that we've seen, probably 7.5%. So a new owner walked in at a payment, which, what is a buyer's most limiting factor is what they can pay on the property. So that was an interesting scenario that for realtors the seller walked away with probably $500,000 more than the market. You ask, well, how do they do that if it's how did it appraise? How could you sell that? And, if they're assuming the mortgage and they have cash to bring into the transaction, then, the bank's going off what the rate is, what the balance is on the assumable, and you don't have to qualify on those pieces. So that was an interesting transaction. But if you're a seller and you need to move and you're kind of in a jam, there is a way to qualify for your new home and still have your old home. So we would help you out with strategy on that if you need it. Again, our phone number, if you want to send text questions to, 480-553-5555. You can comment in here. We'll see that and respond to you. Or you can email me, Ryan at interstatemortgage.net. Like I said, we only service Arizona, but I'll help other people in other states, give you some of our experience, give you a direction to go if you seem like you're paying too high. Like I said, if you're paying over 6%, or if you're paying points at like 5.75, 2 points, those are red flags you need to shop that. And don't worry about brokers being a middle person. A lot of times they get shit for being the middle person. That's actually, in the money business, the lender, the person that has the capital, offers a lower rate, a lower access point for the broker, because we're providing a service for them. They don't have to hire someone to put the package together, to run the scenario, to make sure the income is good, kind of pre-underwrite the transaction for them. That costs a lot of staff and money and overhead, and markets go up, markets go down, so they can just basically use contractors, which is what a broker is, to put those deals together. And then they'll give us lower access to the money, lower access cost for providing that service. So what I find is, when you compare us to the big shops, I would say names that you see on TV during the Masters, or different sponsors. I won't say a particular name here, but they're going to run typically at a 3 to 3.3% cost on the loan. We want to cut that in half for you and just offer a savings. So we think we makes sense. We have lower overhead. We offer lower rates, lower pricing to you as a result. The other thing is, particularly with my firm, I handle my transactions, and I just do everything start to finish, so it's 90 or less. That's a good mark. I'll be getting your pay stubs, your W-2s, and a couple of bank statements up front. We're going to run it through the engine on automated calculation. So that means if you make $10,000 a month, $5,000 a month of your income can go towards expenses, including the new mortgage. We include any vehicle payments that you're going to have after the closing, any credit cards that you may have after the closing will qualify. Things that we don't count is your rent. That's not going to be applicable once you move. We don't worry about cell phones or utilities, things of that sort that don't show up on the credit report. We don't count. Now, if you did one of those Experian booster scenarios where you're trying to boost your credit score and they're reporting your cell phone, your car insurance, those type of things, we call those self-reported, and we don't count those either. So just namely credit cards. If you have student loans, and let's say they're not in a payment, they're in deferment, what we're going to do is use a factor. We do factors. Probably the easiest way to explain is, if you have a $10,000 student loan and you're going, some products will take 0.5% of that and use that as your payment. Others will take a full percent. So you'll be somewhere between $50 and $100 a month counted as your debt if you have a student loan of, let's say, $10,000. If it shows the payment on the credit report, what it will be, then we will use that. But if there's no payment, then we are going to use a factor to qualify you, assuming that payment goes through. What else today on the news? I would just say overall, we've got a positive situation here, but it is higher over the last 30 days. We're starting to tick down. So what we want is peace. Strength through peace is going to help remove uncertainty in the market, and reduce those costs. As prices in oil, that's another big one. Let's just look at oil price. This is another indicator. So last 5 days, You can see the 30-day trend. Ooh, I was in the 70s. Oh, so nice. 65, 70. That's our primo. In the last 5 days, it's kind of been sticking at that $100. Kind of goes over, spikes in some bad news, and now we're into the 89. So that's a big move today down. We're talking 6%. That cuts inflation. What helps the rates on the Feds is inflation. So we know jobs are going to be weak with the AI pressure. So that works to our advantage as far as lower money costs. The next biggest thing is keeping inflation in line, and oil and gas prices is so huge because it affects so many industry products across multiple industries and sectors. So we want that lower, and that tells me if we keep on this pace, we're going to be seeing some cheaper money again. What that means is the money's coming down. You need to be looking at what property you want to start making offers on. You could make an offer on a property and say, hey, I'm going to close in 60 days, and then kind of play this market and try to get the lowest, price in there. That's an option. We think once this kind of settles, we get a new Fed chair in, the other Fed can finish his investigation with whatever happened on the build out, then we're going to start to see the trend. It makes more sense to see it go lower once Iran, assuming peace in the Middle East, as much as peace as possible in that sector, but at least kind of where we were prior to the war. And if you start to see Iranian sanctions released and they start playing in the real market, in these prices, they'd love to get these type of prices on their product. But we can't have regimes killing citizens and dealing with all that stuff. So that creates market uncertainty, and if we can get that on the same page with the rest of the world, we're going to get better pricing for sure. So that's our market update news today. I feel like we had some pretty good news starting the morning when you see these rates, these costs starting to go down, and let's pray for peace on that front. All right. If you have any questions, again, at Interstate Mortgage on YouTube, you can put comments in these videos. We'll follow up with you, or you email ryan@interstatemortgage.net. And we hope that helps you, and we'll talk to you in the next stream. Take care.